Hello everybody, my name is Frangky Alfredo Sibarani and I'm from Accounting University of North Sumatra. Today I'm going to explain you about firm operations and profit sharings. So first I will tell you about firm operations. Transactions that exist within a company like service companies, trading companies and manufacturing companies can be grouped as follows. First, sales transactions. Sales transactions, goods or service made in cash or credit. Second, transactions of receiving money. Transactions of receiving money from various sources, such as cash sales, account receivable as a result of credit sales, interest receipts, receipt of capital deposits, and others. Third, purchase transactions. Purchase transactions, goods or service, both goods in the form of inventory and goods in the form of assets to be used in company operations, conducted either in cash or on credit. Fourth, transactions of spending money. Transactions of spending money for various purposes, such as cash purchase, debt payments, expense payments, and others. And the last, other transactions. Other transactions outside the four transactions that I had told you, such as transactions returns for purchase and sales returns, recording data in adjustment data, and others. The recording of the various transactions above is: first, sales transactions. In sales transactions, there are 4 points. A. Sales of service on cash will be recorded in debit cash and in credit service revenue. B. Sales of service on credit will be recorded in debit account receivable and in credit service revenue. And C. Sales of merchandise by cash is recorded in debit cash and in credit sales. And D. Sales of merchandise on credit is recorded in debit account receivable and in credit sales. Second, transactions of receiving money. In transactions of receiving money, there are 3 points. A. Sales of service or merchandise on cash will be recorded as previous transactions. B. Receipt or receivable will be recorded in debit cash and in credit account receivable. C. Interest receipts, receipt of capital deposits, and loan receipt will be recorded in debit cash and in credit interest revenue, capital, and account payable. Third, purchase transactions. In purchase transactions, there are 2 points. A. Purchase of merchandise on cash will be recorded in debit purchase or inventory, supplies, and office equipment, and in credit cash. B. Purchase of merchandise on credit will be recorded in debit purchase or inventory, supplies, and office equipment, and in credit account payable. Fourth, transactions of spending money. In transactions of spending money, there are 3 points. A. Purchase on cash will be recorded as previous transactions. B. Debt payments will be recorded in debit account payable and in credit cash. C. Drawing payments, expense, and others will be recorded in debit drawing account, sales expense, and commission expense, and in credit cash. Fifth, other transactions. In other transactions, there are 3 points. A. Purchase returns will be recorded in debit account payable and in credit purchase return. B. Sales return will be recorded in debit sales return and in credit account receivable. And C. Depreciations of fixed asset and equipment will be recorded in debit depreciation expense and equipment expense, and in credit accumulated depreciations and equipment. So guys, that's all about firm operations. Now we are going to profit sharings. In profit sharings, there are some ways to share the firm's profit or loss. First, divide it equally. Second, divide it according to certain comparisons. Third, divide it according to the ratio of capital. In dividing according to the ratio of capital, there are 4 points. A. Profit or loss divided according to the initial capital of the establishment. B. Profit or loss divided according to the initial capital of the year. C. Profit or loss divided according to year-end capital. And D. Profit or loss divided according to the average capital. Fourth, interest is calculated on the equity of the partner. And fifth, profit or loss must first calculate salary or bonus. And the last, profit or loss must first calculate in the interest on capital and salary bonus. So there is the instructions that I made. So from the instructions we can understand how to use 6 methods that I had told you before, and from the methods we can calculate the profit sharings from the firm. First, divide it equally. From the instructions, we know Amir's and Badu's firm's profit is 120,000 rupees. So, the journal is in debit income summary and in credit Prive Amir and Prive Badu. So, how we get 60,000? 60,000 from 120 divided 2. So, we get 60,000. Second, divide it according to certain comparisons. So, in these methods, I add ratio. So, the ratio is a half. So, we can journal in debit income summary 120,000 rupees and in credit Prive Amir 40,000 rupees and Prive Badu 80,000 rupees. So, how we get 40,000 and 80,000 rupees? 40,000 we can get from a third times 120, and 80,000 rupees we get from 2/3 times 120,000. Third, divide it according to the ratio of capital. A. Profit or loss divided according to the initial capital of the establishment. So we can journal in debit income summary 120,000 rupees and in credit Prive Amir 55,174 rupees and Prive Badu 64,286 rupees. So we get 130,000 and 150,000 from the instruction. We know Amir and Badu's firm was established on 4 January 2019 by Amir and Badu, and they invested 130,000 and 150,000, and we get 280,000 from 130,000 plus 150,000 rupees. B. Profit or loss divided according to the initial capital of the year. So, first, we must calculate Amir's profit and Badu's profit. Amir's profit, we can get 72,000 rupees, and Badu's profit, we can get 48,000 rupees. So, how we get 150,000 and 100,000 rupees? There is from instruction. We know Amir's balance and Badu's balance 150,000 and 100,000 rupees. So we can journal income summary in debit 120,000 rupees and in credit Prive Amir 72,000 rupees and Prive Badu 48,000 rupees. C. Profit or loss divided according to year-end capital. First, we must calculate Amir's profit and Badu's profit. Amir's profit, we get 66,857 rupees, and Badu's profit, we get 53,143 rupees. So we get 195,000 rupees and 155,000 rupees from we get from the instruction. We know totals capital Amir and Badu. So we get 350,000 from 195,000 rupees plus 155,000 rupees. So we can journal in debit income summary and in credit Prive Amir and Prive Badu. D. Profit or loss divided according to the average capital. So we must calculate Amir's average capital and Badu's average capital. In the instruction, we know if invest, we add to Amir's and Badu's capital, and if withdrawal, we minus it from Amir's and Badu's capital. So, in Amir's average capital, in January, there we can see times 2. Times 2 we get from January to March, January, February, so times 2. In March, we can see times 2 we get from March and April, and in May we see times 2 we get from May, June, and in July we see times 3 we get from July, August, and September. And October, we see times 3. We get from October, November, and December. And same as in Badu's average capital. So after that, we know we calculate total average capital. So total average capital is 3,080,150,000 rupees. After calculate Amir's average capital and Badu's average capital, now we are going to calculate Amir's profit and Badu's profit. In this slide, we know Amir's profit and Badu's profit. After that, we can journal in debit income summary and in credit Prof. Amir and Prof. Badu. Fourth, interest is calculated on the equity of the partner. Interest calculated on the partner's initial capital is 6% and the residual is divided equally. First, we must calculate Amir's capital interest and Badu's capital interest. We can see in the slide. So after we calculate Amir's capital interest and Badu's capital interest, we calculate the residual income. After we calculate residual income, we calculate Amir's profit and Badu's profit. So after that, we can journal in debit income summary and in credit Prof. Amir and Prof. Badu. Fifth, profit or loss must first calculate salary or bonus. A. Salary. Example. From the previous instructions, Amir's salary is 20,000 rupees and Badu's salary is 30,000 rupees and residual income is divided equally. First, we are going to calculate Amir and Badu's total salary. After that, we calculate residual income. And after that, we are going to calculate Amir's profit and Badu's profit. After we know Amir's profit and Badu's profit, we can journal in debit income summary and in credit Prof. Amir and Prof. Badu. B. Bonus. In bonus, we can see in slide there are 2 points. First, profit before deducting the bonus, and second, profit after deducting the bonus. First, this is the example of profit before deducting the bonus. Amir gets 20% bonus from profit before deducting bonus and residual income is divided equally. So the calculation. First, we are going to calculate Amir's bonus. After that, we calculate the residual income. After that, we calculate Amir's profit and Badu's profit. After we know Amir's profit and Badu's profit, we can journal in debit income summary and in credit Prof. Amir and Prof. Badu. Second, this is the example of profit after deducting the bonus. Amir gets 20% bonus from profit after deducting bonus and residual income is divided equally. So the calculation is, in this slide, there is formula to solve the problem from profit after deducting the bonus. So we know X is net income after deducting the bonus. First, we must calculate how much is the values of X. After we know the value of X, we are going to calculate Amir's bonus. After that, we calculate residual income. After that, we are going to calculate Amir's profit and Badu's profit. After we know Amir's and Badu's profit, we can journal in debit income summary and in credit Prof. Amir and Prof. Badu. 6. Profit or loss must first calculate the interest on capital and salary or bonus. From the previous instructions, with calculating the interest, Amir and Badus are given salaries 20,000 rupees and 30,000 rupees, and residual income is divided equally. So the calculation we can see in slide Amir and Badus. So we get 11 and 50 rupees and 8,150 rupees from the fourth method. So after we calculate that, we are going to calculate the residual income. After that, we are going to calculate Amir's profit and Badus profit. After that, we can journal in the income summary and in credit Prof. Amir and Prof. Badu. That's my presentation about film operation and profit sharing. I apologize from the deepest of my heart about all of the mistakes that I made, like in grammar, pronunciation, and vocabulary. And thank you for watching. Don't forget to like, subscribe, and turn the notification. And if you have any question, you can comment this video. Thank you and bye bye.